So obviously, once you get to the house, you're going to build a little bit of rapport. And when I do it, I walk in, and it's very short, kind of to the point. If I find something or I see something that makes sense, that it's relevant, then I'll talk about that. Otherwise, I'll just tell them that I really like the area, that I'm new here to the area, still kind of figuring it out. But that I like where they're staying. I compliment them. Then we'll talk a little bit on the way to the table, get down to the table, and maybe another minute or so, talk to them, come to some kind of natural ending point in the conversation, and then we just get into it. So,
are there any key questions that you ask?
No, there's none.
Okay.
No key questions. It's just I just want them to feel comfortable with me.
Not questions like how's the weather. It's more intentional stuff.
Yeah, it's more intentional.
So you get to know the person.
Okay. Like how long have you lived here? Been here for 3 months, they say, right? Or 3 years. Oh, awesome. What brought you down here? And then they tell me, where'd you come from? Then they tell me, how do you like it here? Yep. So it's easy. Just going back and forth like that.
Sweet.
Find something that they want to talk about. And that ends, and then I get right into this. So I always pick my papers up, and I do one of these, and I say, all right, Johnny, so this is what I received from you at my office.
Okay.
And now most people fill these out, and they send it in to us because they either just bought a property or they refinanced on one. And they're just looking to make sure they have something in place. So if something happened to them yesterday, like death or disability, their family has money coming in today to either pay off a property, pay down a property, or just leave some money behind for transition. Okay. So what my job is I'm both a field underwriter and an independent contractor. So field underwriter, meaning I'm going to gather some information from you. Independent contractor, meaning they contract me with about 28 companies. These are some of the companies that I represent. Now, they're all A+ rated carriers, and you probably recognize some of them on there, right? And we kind of touched on this on the phone, but what that really allows me to do is to really shop around and customize something for you that's affordable, comfortable, but at the end of the day, Johnny, I have to find something that you actually qualify for. Okay? So one thing to keep in mind about me is that I'm not captive, and I don't know if you have any idea what that means, but those would be those agencies like Allstate, State Farm, Farmers, right? Where they have access to about 2 products, I've got access to 100.
Okay.
Now, the big thing to keep in mind, though, is that captive agencies act a lot more like employees, whereas I'm totally independent. So basically what that means for you is that my whole goal here today is to find you the best coverage for the best price that we can actually get you approved for.
Okay, that makes sense.
So it's a pretty easy process, not much to it. There's no physicals or blood work or anything crazy like that. What we're going to do is spend about 2 minutes or so on some money questions, 2 minutes, give or take, on some health questions, and then about 5 minutes shop around trying to figure out what the heck actually makes sense for you.
Okay, cool.
Based on the answers that you give me to my questions. Now, once we find a plan that actually makes sense, what we'll do is go ahead and submit request for coverage. Request for coverage takes anywhere from 1 to 4 weeks, roughly. And what the company's doing at that time is they're going to look at things like your prescription history, your medical background. They want to make sure no one's trying to take out insurance in your name. Well, you didn't just escape from prison or hide down here in Texas, right? So, so once you're approved, though, you're approved. Okay. At that point, they can't take anything away from you. So they can't increase premiums. They can't decrease the face amount. You're good to go.
Okay, great.
That all kind of make sense?
It does.
All right, perfect. So now my understanding is that this is a mortgage, right? You don't rent?
Right.
All right, perfect. So then I just go through the financial inventory sheet.
Okay.
And
let's run through that.
Okay. So that's my first question that I ask. Is so my understanding is this is a mortgage, right? You don't rent?
I don't. No.
All right, perfect. Okay, so mortgage, 30-year mortgage, I assume?
30-year mortgage.
30. Yeah. All right. And the house value. So I know right now you owe about $210,000 on the house, but if you were going to sell it tomorrow, do you have any idea about how much you could get for it?
Yeah, about $350,000.
All right. So you have a bunch of equity in the house right now. All right. And now that's obviously the number we really want to protect is that equity. We need to make sure that if something happens to whoever's left behind, God forbid they get to the point where they have to sell the house, that they're able to retain that equity and get that big payout there. That way the bank keeps their fingers off it. Right. That kind of makes sense?
Yep.
All right. So what is your monthly payment?
$1,800.
$1,800. Is that escrowed? So property taxes
yeah, that's
and all
everything.
that?
Everything's
okay,
wrapped
so
up in
$1,800. And are you paying anything extra towards your mortgage to pay it off early or anything like that?
No.
No, okay. I always tell people that the bank has enough money. So if you can keep some of that in your pocket, you're better off.
Sure.
Right?
I agree.
All right. So you are 63, is that right? All right. And when's your date of birth? And then
April 6th.
Okay, April 6th. Are you on any medications right now?
High blood pressure, Take a pill for diabetes and cholesterol pills.
All right. Were you prescribed anything in the last 7 years that maybe you're not taking, like pain medication, anything like that?
No.
Nothing? All right. So just the high blood pressure, diabetes, probably metformin or something, I assume.
Yep, exactly.
And then cholesterol. All right. And do you smoke?
I don't.
Okay. Good answer. Okay. You just see what that does to a premium.
Yep.
So funny story. I was sitting with a woman, man, this was maybe two and a half weeks ago down in the Cleburne area. She was right about your age, so 62. She was 62 years old. She was looking for $215,000 worth of coverage. All right. She had a 15-year term, so it was a shorter term period. She wanted 20 years worth of coverage. So she smoked. So I ran the quote. 62-year-old female, $215,000 worth of coverage for 15 years. As a smoker, $683.
That's a lot of money.
It's a lot of money.
Yep.
So non-smoker. Take a guess. What do you think the non-smoker rate
300
was?
something?
264.
Wow.
264,
Yeah.
right? So that's the difference.
I'm glad I'm not a smoker then.
Yeah.
Wow.
For sure. So good answer there. So what is your occupation? Are you employed, disabled, retired?
I work I'm a union guy.
Union guy?
Yeah,
All
car.
right.
Yeah, GM.
There you go. You like it?
Yeah, looking forward to retiring in 2 years.
2 years. All right. You're going to start living the good life, huh?
Yep.
I'll get there one day. That's my goal. All right. What's your monthly income after taxes?
About 4,500.
All right. And any major surgeries? We're talking things like organ transplant, open heart surgeries,
No,
or nothing?
luckily no.
All right. All right. So family, this is who are you trying to protect with this family, or who's your beneficiary?
My wife.
All right. Your wife, and what's her name?
Sophia.
Can you spell that for me?
Yeah, Sophia.
And last name? Same as yours?
Yeah.
All right. Rivera. Now, is this coverage? Are we looking for coverage for just you or for you and her?
I'd like to get it on both of us. If we
Okay.
can.
We can take a look at that. And how old is she? She's 55.
55.
All right. You know her date of birth?
April 9th.
Oh, there you go. Both have the. So you just buy cards for each other?
Yeah, we celebrate her birthday, not mine.
Okay. All right. And is she still working?
Yeah, she works. She's a teacher.
Teacher. What she teach?
She teaches math.
Okay. Never been a strong suit of mine. All right. Monthly income after taxes for her?
About the same as mine, about 4,500.
Okay. Any medications that she's on that you know of?
Anxiety.
Okay.
And blood pressure.
Blood pressure. And do you know what the medication is for anxiety that she's taking?
Xanax.
Xanax. All right. Does she smoke?
She does not.
Perfect. All right. Any major surgeries for her?
No, she's been pretty good.
All right. And then would you be her beneficiary,
Mm-hmm.
I assume? All right. All right. This we already went over on the phone. Now, do you guys have any kind of life insurance right now that you privately own? So something outside of work?
No, just through work.
Just through work. Okay. And how much do you have through
I
work?
think we each have about 150,000.
Yeah. All right. I always make it a point to figure out if somebody has something outside of work. The thing about work insurance that you're going to want to keep in mind is think of it kind of like a company car, right? So once you leave, so does it. All right. So that's one thing that you're going to want to keep in mind.
Never thought of it that way.
Yeah. A lot of people don't. And once they retire and they think they can keep it, and they can, but then what they don't realize is they're going to pay at their attained age at that point. So you're going to be 20 years old. It's going to be 20 years more expensive.
No, we don't want that.
No, you don't want that. All right, perfect. So let me just run through this, make sure we have everything. 18, 63, she's 55. All right, got the medications. Perfect. All right, so let's look at a few different options for you, okay? So at this point, I would just get through option 1, option 2, sometimes option 3, depending on the situation. Present it and go through it,
Okay, so what are your options?
So we're going to assume that we're going to go with a term product here.
Yeah, super basic.
So I write down the options on the back. So there's $210,000 mortgage. So I'm writing down $210,000 and write down when I present it the critical, chronic, and terminal illness. And do that on back. So that'd be option number 1. And let's just say that's going to be $262. And now one thing that I did that was intentional is when I get to that smoking question, I make sure to tell them if they're not a smoker. That's great
how
because of the premium. And then I tell them about that story of the woman in Waco or Cleburne to give them an idea of how much they're going to expect to see when I present them the
I'm
options
with you.
as far as
I
the
like
premium.
that. Yeah, that's great.
So you don't catch them off guard that way. So let's just say that's $262 a month, and then option 2, we'll keep this basic. We'll do 50% of that, so $105,000.
Mm-hmm.
And then same thing. I'm writing down critical, chronic, and terminal for 105. And we'll just say that's $131 a month. All right. So after I get done writing it down, I simply say, all right, so I have a couple different options that I think would make sense for you. All right. So option number 1, this would be for $210,000. That's exactly what you own the house today. So for $210,000, that'd be $262 a month. And one thing that's really unique about these policies is it's going to pay out, obviously, if you were to die. But where these policies have a ton of their value is in their living benefits. So it's also going to pay out while you're still alive. So what do we mean by that? If you were to get critically, chronically, or terminally ill, it's going to pay out 100% of that face amount. So critical illness, we're talking anything like heart attack, internal cancer. So not like skin cancer, but anything internal.
Sure.
Stroke. Chronic illness, this would be anything like heart disease, heart failure, liver disease or failure, kidney failure, Alzheimer's, dementia, anything chronic. If it's chronic, it's chronic, it pays, right? Terminal illness in Texas, it's anytime you're diagnosed with 2 years or less to live, that's going to be considered terminal. If any one of those situations were to happen, they're going to pay you 100% of that face amount, so the full $210,000. Okay. Now, this will also pay out if you were to become disabled. And to be clear, that's not you break your leg disabled. That's if you can't perform 2 out of your 6 daily living functions. Okay. If that were to happen, again, they're going to pay out 100% of that face amount. Okay. All right, so that's option 1. Option 2, looking at $105,000 for the face amount. This would be $131 a month. Exact same living benefits as option number 1. So you're going to get the critical, chronic, and terminal illness as well as a disability where something happens, you're going to pay out 100% of the face amount to you. So now, out of these options, what one do you think would make the most sense for your situation?
Is this for each of us, or is that total?
So this would be for you, and then we'll go over your wife's after.
Yeah, I think I want to cover the full amount on me.
Okay, so we'll do option 1 for you. Now, remember, what they're going to do, they're going to look at things like your prescription history, your medical background, and make sure that it's really you trying to get the coverage. Okay. So we'll go option 1 for you, and then this is what your wife's would be, and then I would present the exact same thing. They would pick one, and then I would reiterate. All right. So again, what they're going to do for her, same thing that they're going to do for you.
Makes sense the way that you post your deals when you get them. It's like because you literally break them out individually, huh?
Yeah, individually, 2 separate pieces of paper.
What's your thought behind that?
I just think that so if I present it to one person, right now it's $260 a month. That looks a lot more attractive than $500 and $500 whatever that would be.
Yeah, I'm with you. That makes sense.
Yeah, and so now before I present the other option to the wife, I want them just thinking about this policy because it's $262. Now you just committed to it. You're gonna get it.
Totally.
So now it's like you see the value of it, and now we have yours out of the way. So this problem is already solved, and now we're on to the next problem.
Do you do underwriting first, or do you do them do you then underwrite this guy's policy before you move on to the wife's, or do you wait to do the applications until you get an answer on both of them?
I wait until I get an answer on both. Okay. So I present this. We're doing option 1, and then I move over to the wife. Gotcha. And now sometimes I'll run into let's just pretend that the premiums are going to be exactly the same. All right. Then they're going to say, oh man, so that's combined, that's $500, and that's kind of expensive. Then what I say is, so what I recommend, typically what we do is we're going to look at the breadwinner. We're going to cover them for the majority of the mortgage. So let's do this. We'll have option 1 for your husband, and then we can do option 2 for you, right? So that's going to provide him enough coverage where it's going to make a significant impact. Right. If something, God forbid, does happen to you, where he's going to be able to adjust to the income loss, but he's still going to have enough money coming in due to what his current employment situation.
You keep it really simple, and I like that. So you get right to it. Not a lot of fluff in there. Pretty quick appointments. Where do you build the most value in your presentation?
So as I'm going through, and I'm very intentional when I'm going through my script, right? So I reiterate when I get to this. Well, I'll kind of back up. So when I show them the form that they filled out, they fill this out for a reason, right? And so I'm telling them what that reason is. So I'll say now most people fill these out because they just bought a property, refinanced on a property, right? And they're just looking to make sure that they have something in place. They're just looking to make sure that they have something in place today. So that if something happened to them yesterday, right? And I say yesterday to make them today. If I wasn't here today, what's going to happen? Right. So if something happened to me yesterday, that your family has money coming in today to either pay off a property, pay down a property, or leave some money behind for transition.
That's a great line.
Yeah,
that you use there.
Yeah, and so we have the options now, because sometimes we're not going to cover the entirety of the mortgage, right?
And your closing percentage is super high. I mean, closer to, you say about 85-90%.
Yeah, it's probably closer to 90, maybe just over.
9 out of 10, 18 out of 20 sits you're converting.
Yeah.
What do you think it is about this presentation that is getting you such a high close percentage?
So it's very structured. I think it's very structured. People like that, and they feel like they trust the process more. Like, hey, this guy's done this a million times. I can tell.
I can see that.
And the points that we hit on there, I think, are just they're good points.
It's like
right?
very little explanation of anything, though. It's like very direct.
Yeah. All right. So here's what this is my philosophy with sales, and I think this holds true. And I sold with like GNC and like weird, stupid little things. And what I found out through doing all the different sales stuff is people like simple. They like simple. When you provide too many options, it gets confusing, and then that's when you're going to run into, I want to think about this.
I really like that. That's super duplicatable too.
Very, very duplicatable. I'm duplicating this from Grady's video.
Right.
Like this is exactly what his in-home was, and that changed everything for me. I wasn't closing, and then all of a sudden I am. And what I really like about this presentation is you're telling them beforehand that we're going to submit a request for coverage.
Really assumptive.
Yeah.
Yeah, it's an assumptive pitch.
I love it. And then when I do that, I make sure that I'm nodding my head when I say.
Body language is everything. Yeah. That's awesome, dude.
Then they start nodding. And so then it's closed.
So like when you're setting appointments, you're likely going to close that. So yeah, that's awesome, dude.
Yep. So that's the in-home.
Where can they find like a copy of your presentation?
I'm hoping from this video.
Okay.
Yeah.
Gotcha. So we'll get that. Maybe we can type it out or something like that. We can get something on there, just so people can have access.
Like
to
the words.
Yeah.
Yeah. I can type it out.
Okay,
or whatever.
that'd be great.
That's fine
I think
too.
that'd be super helpful to be able to give somebody something on paper.
So I think so too.
They can get closing 90%, writing $60,000 a month those are crazy numbers.
Yeah, because I remember that my first few appointments when I walked in there was just I really didn't have a game plan. Right, like I thought that I was going to know what I was going to say, but then something caught me off guard and I didn't.
Right.
And I felt very unorganized, and you can see that.
Structure gives you confidence.
Structure gives you confidence, but it doesn't just give you confidence; it gives the client confidence in you.
Yeah, the end. That's great.